Welcome back to the past question series on cost accounting. So we'll continue from where we stopped in the other video. Now the first question in this particular video session is, what is the economic order quantity, that's EOQ, for Qwuiga Ventures if the annual demand of inventory is 46,875 units? Ordering cost is 32 naira while the carrying cost is 12 naira. Can you remember that I mentioned the other time that carrying cost can also be called holding cost? So it's either you see it as carrying cost or holding cost. So we're asked to calculate the economic order quantity, and that's the EOQ. And if you can recall, we said the formula for EOQ is this 2BOHC. So to get this, that will be 2 times the annual demand, that's 46,875. The ordering cost, which is 32 naira, all divided by the holding cost, which is given as the carrying cost, that's 12 naira. So this will give us, well, I need to put my calculation on the last 2 times 46,875. 2 times 46,875 is 2 divided by 2. Square root of 7. Okay. Square. 250,000. Okay. So the total of this will give us 250,000. That means the whole multiplication of this divided by 12 will give us 250,000. While the square root of 250,000 will give us 500 units. That means the EOQ for Qwuiga Limited is 500 units, and that's option A. So move to the next question, also an EOQ. Find the economic ordering quantity, that's also the EOQ of Qwuiga Ventures, if the annual demand is 6,000 units, the purchase price of material per unit is 20 naira, and the cost of placing and receiving one order is 60 naira, and annual carrying cost of 1 unit is 10% of the purchase price of material. So in this question, you can notice that there's a slight change in the way they've been setting the questions right from when we started solving questions on EOQ. Here, we also follow the same formula we've been using since. So we have to, our annual demand here is 6,000 units. Our ordering cost is 16 naira. Divided by, so now they said our holding cost, now as a carrying cost of 1 unit is 10% of the purchase price of the material. Our purchase price is given as 20 naira. So to arrive at our holding cost to be 10% of 20 naira. So we come down here. This times this gives us 720,000. And the 10% of 20 naira will always give us 2 naira, which leaves us with the square root of 360,000, which will give us to 600 units. So that's the economic order quantity for Qwuiga Limited. That's question 2. In this video session is 600 units, which is the second option. That is option B in the question. So move on to the next question. If the economic order quantity is 10,000 units, we have the maximum usage to be 950 units per day, the minimum usage to be 400 units per day, the average usage to be 200 units per day, and the reorder period to be 4 to 8 days. So what is the reorder stock level? Yes, what is the reorder stock level? So reorder stock level is the same thing as calculating the reorder level for a particular unit. So to calculate our reorder level, if you can remember in our tutorial videos where I talked about material costing, yes, under the branch of inventory control, I talked about the reorder level, reorder quantity, maximum usage, minimum usage, average usage, also the lead time. And we also gave formulas for each of these concepts. So now in this question, we are required to calculate the reorder level. That's the reorder stock level. And the formula for calculating this reorder stock level is the maximum usage as maximum usage multiplied by the maximum lead time. As the maximum usage multiplied by the maximum lead time. That's the maximum usage multiplied by the maximum lead time. So from the question, the maximum usage is 950 units per day, while the maximum lead time, they give us reorder period 4 to 8 days. The 4 days is the minimum lead time, while the 8 days is the maximum lead time. So write 8 days here. And this will give us a total of 7,600 units as the reorder level for a particular firm. And this is the option C in the question. Moving on to the next question now. So the next question goes thus: Saki Enterprises has its EOQ as 2,000 units, reorder level as 400 units, reorder period as 2 to 4 days, if its maximum usage is 300 units and minimum usage is 150 units. What is the maximum stock level for Saki Enterprises? So remember, this is also a branch under the inventory control. And we talked about maximum stock level also. Maximum stock level. And we said the formula for maximum stock level is the reorder level plus the reorder quantity. So if, okay, let's continue. Reorder level plus reorder quantity. Then we deduct it. Then we deduct reorder level plus reorder quantity. Then we deduct the multiplication of minimum usage minimum lead time. So here is it. So remember we talked about reorder quantity. We said in a situation where there is no reorder quantity in the question, it is always EOQ. Reorder quantity and EOQ are always the same thing. It is the same thing. It means the same thing. So in this question, we are not given reorder quantity. Instead, we are given the EOQ. That means that EOQ is the reorder quantity we have to visit. So it can as well say EOQ. So it can be either of the two. Depends on whatever is given in the question. So we calculate our reorder level is 400 units, while our EOQ is 2,000 units. Then we deduct. So our minimum usage in this question is 150 units, while our minimum lead time is 2 days. That's 2,400 units minus 300 units. Now 150 times 2 is 300, so this gives us 2,100 units. Yes, 2,100 units, which is D, as option D, the question. So move to the next question, which is also on material costing, EOQ again. Okay. If the economic order quantity of Yobe Limited is 300 units and its cost per order is 20 naira and the firm's annual demand, find the firm's annual demand if the cost of holding one inventory is 2 naira. So we start question 5. So EOQ again. DO, it's 2 times our demand. We don't know our annual demand. We're told that our EOQ is 300 units. And Our ordering cost is 20 naira, while our holding cost is 2 naira. So we come down here, 300 plus 40g over 2. We can always bring our square root here as square, which will be 300 square as equals to 20d. That's this divided by this, which will give us d equals 300 square by 20. D will now be equal to 90,000 over 20, which will give us 4,500 units. And with this, our option is B. From B for this one. Move on to the next question now. Okay. On to the next question. What is the average reorder period of a firm with an economic order quantity of 2,000 units, average usage of 100 units per day, and reorder period of 4 to 10 days? It asks us for the average reorder period, and we have the lowest reorder period and the highest reorder period. So to get the average reorder period, it will be the addition of the maximum lead time. Kindly note that reorder period is also the same thing as lead time. So to arrive at the average reorder period, to be the maximum lead time plus minimum lead time divided by 2. Divided by 2. So the maximum lead time in this question is 4 days, while the minimum lead time is 10 days, divided by 2, which will give us 7 days. And the right option for this is option D. One of these is a method for overhead apportionment. We have the one-step apportionment method, formal step apportionment method, divisional apportionment method, and specific apportionment method. When we are discussing accounting for overhead, we made mention of reapportionment of service department costs to production department, and mentioned that there are 3 methods to do that. The first one is the one-step apportionment method, which is also known as the direct apportionment method. We also have the elimination method, and we also have the continuous allotment method. So out of the options given here, the only one that is among the 3 methods of reapportioning overhead costs here is just the first one, which is the option A, one-step apportionment method. So the correct answer for that question is A. Move on to the next question. Under or over absorbed fixed manufacturing costs has its relevance to dash costing. Is it absorption costing, marginal costing, standard costing, or batch costing? Also, under overhead, when we're discussing accounting for overhead, we mentioned over and under absorption. And remember, when you're calculating your marginal cost and absorption costing, it is only the absorption costing that makes use of anything that have to do with fixed, over absorbed, or anything like that. Marginal cost only focuses on the variable cost. So the correct option is the of over or under absorbed fixed manufacturing cost only has its relevance to absorption costing. So move on to the next question. So ABC Limited has 2 service departments and 2 production departments. Information for each department for 2009 is as follows. We have the service department, which consists of the administration and maintenance, and we also have production departments, which consists of molding and assembling. We have the budgeted overhead cost and the direct labor hours. So using the direct method, that's the one-step apportionment method, all will be the maintenance overhead costs apportioned to assembly departments on the basis of direct labor hours. If you follow our video, that's our tutorial video on accounting for overhead, I think this particular example was solved. Yes, this particular example was solved, and this is a past question. You can see the exact thing here too. So we proceed to solve the question. So we are asked about the maintenance overhead cost that will be apportioned to assembly department on the basis of direct labor hours. So now what we are asked to reapportion, we're using the one-step apportionment method. That's the direct method of apportionment, of reapportionment of service department's cost to production department. And if you can recall, under this method, we said we only reapportion service department's cost to only the production department available in the organization. So let's say we are to reapportion administration expenses, we only take it to molding and assembly department. And if we are to reapportion maintenance cost, we only take it to molding and assembly cost on assembly departments only. So now we are to apportion maintenance cost to assembly department to know the amounts that will be charged to assembly department. And remember, our basis for apportionment is direct labor hours. So the first thing you do, just the way it was explained in our tutorial video, is to sum up the activity level. And the activity level that's to be used as the basis of apportionment to this question is the direct labor hours. DLH, direct labor hours. So the direct labor hour also, since we are only sharing the maintenance costs to just two departments, so we share the cost based on the activity level of just these two departments. So the activity level for molding department is 25,000 direct labor hours, while the activity level for assembly department is 32,000 direct labor hours, which gives us a total of 57,000 direct labor hours. So now we have to share 120,000 overhead cost under the maintenance department to assembly department. Remember, this is for molding and this is for assembly. So if we are to share to apportion to assembly department using the direct labor hours as a basis of apportionment, to be 32,000 direct labor hours. Okay, let's look at 32,000 direct labor hours divided by the total. That's 57,000 direct labor hours. They will multiply it by the overhead cost, which is 120,000. And this will give us a total of 67,368.42. Yes, so this is the overhead cost of maintenance department that will be apportioned to assembly department, and this is the same as option C in the question. So I hope you understand the way this one is being solved. So move on to the next question now. If the internet overhead cost for Faculty of Business Administration is 500,000 naira and it has 6 departments in the faculty and 100 staffs in each department, what's the basis of apportionment? What basis of apportionment is most appropriate for apportioning the internet overhead costs? We have the floor area occupied by each department. We have the number of staffs in each department. We have the number of working days in a week. And we have the acres of land owned by each department. So from this question, the most appropriate basis of apportionment that should be used for apportioning this internet overhead cost should be the number of staffs in each department, because we can't use the floor area occupied by each department. This has to do with the internet costs installed in the faculty as a whole. You can't use the owner of land owned by each department to apportion the cost. Yes, neither can we use the number of working days in a week. So the correct option for that is option B. So moving on to the next question, we have which of the costing terms stated below is associated with charging a specific item of overhead costs to one particular department in an organization. This is also under accounting for overhead. Yes, accounting for overhead. So we mentioned that there are 3 basic methods for accounting for overhead. We have the absorption costing method, we have the apportionment method, and we have the allocation method. Under the apportionment method, that is where we have the reapportionment of service department's costs to the production department's cost. And the one that actually talk about recharging a specific item of overhead cost to one particular department in an allocation without sharing it or anything is the allocation method. You just take it and you just charge it to that service department or production department only without sharing it with any other center. So the correct option is C. So move on to the next question. Allocation person, item, or equipment for which costs may be ascertained and used for the purpose of cost control is dash. We have the investment center, we have the cost center, responsibility center, and accumulation center. Those are the questions. They said a location or person or item which costs may be ascertained. We are going to ascertain costs and we are going to use it for the purpose of controlling costs. Is cost center. No other one except for cost center. Move on to the next question. One of these is not a method of labor remuneration. So under this is a topic under accounting for labor, as labor costing. So this is the first question we are solving under that. So they said the first option is Mercy-based costing, Mercy-based method. Then the second one is time-based method. The third one is output-based method, and fourth one is bonus incentives method. So under our tutorial video on accounting for labor, that's labor costing, we mentioned that there are three basic methods of accounting for labor. We have the time-based method, we have the piece rate method, which is also the same thing as output-based method, and we also have the bonus and or incentive schemes. So the odd one out here is A, that's the Mercy-based method. There's nothing as such as Mercy-based method in accounting for labor. A worker who worked for 6 hours at an hourly rate of 3 naira per hour is expected to earn dash under the day rate system. Yes, under the day rate scheme. So the day rate scheme is also the same thing as saying the time-based rate, or yes, the time-based rate. Like you are paid based on the hours you worked. And the formula for calculating this is just the number of hours worked by the rate per hour. So under this, we have we work for 6 hours and the rate per hour is 3 naira. So it's just a multiplication of 6 hours by 3 naira, which gives us 18 naira. That will give us A. That will give us 18 naira. So the correct option for this particular question is A. And 6 hours times 3 naira, which gives us 18 naira A. Hi guys, welcome back to Cost Accounting Past Questions series. As this will be the last video session for this particular past question series on cost accounting. So we continue from where we stopped in our last video. So the question we are going to start with here goes thus: all except one is not a method of reward of labor under the bonus scheme. Number 1, A, Alse bonus scheme, B, Rowan bonus scheme, C, Shirley bonus scheme, and D, Alseware bonus scheme. When we're talking about labor costing, we mentioned that there are 3 ways by which we can compute bonus that is due to employees or workers. So the first one is the Alse bonus scheme, the second one is the Alseware bonus scheme, and the third one is the Rowan's bonus scheme. So from this question, the odd one out is the C, that is the Shirley bonus scheme. Move on to the next one. The formula for Alseware bonus scheme is dash. We have bonus pay equals the half of time saved multiplied by the hourly rate times 100, or B, the bonus pay is 1/3 of half time saved by the hourly rate, C, 1/4 of the time saved by the hourly rate, and D, bonus pay that will be equal to the half of the time saved multiplied by the hourly rate. When we're calculating the formula for these 3 methods, mention that the formula for Alseware will be 1/3 of the time saved multiplied by the hourly rate. Okay, mention that an employee only gets 1/3 of the profit from the time saved while he was working. So that's why the amount that will be paid, that's the bonus pay that will be given to an employee under the Alseware bonus scheme, will be 1/3 of the time saved multiplied by the hourly rate. So move on to the next question now. The following data relates to the work in the finishing department of a certain factory. So normal working day is 7 hours. The basic rate pay per hour is 5 naira. The standard time allowed to produce 1 unit is 4 minutes. The premium bonus payable at basic rate is 60% of time saved. On this particular day, an employee finished 180 units. All will be is gross pay. So here we have to calculate the gross pay of an employee, which will be the combination of his basic pay and his bonus pay. Some of it will be, the addition of the 2 will give us his gross pay. So we are told that the normal working day is 7 hours per day. That is normal. Normal working hour. And the standard time for 1 unit. For 1 unit is 4 minutes. So if the standard time for 1 unit is 4 minutes, okay, if the standard time allowed for producing 1 unit is 4 minutes, the number of units you must produce in an hour will be 60 minutes divided by 4 minutes, which will give us 15 units. That means in 1 hour, we must produce 15 units if we are following the standard. So in this part, that means if we have 7 hours, that's 7 hours is the standard day, like the normal working day. Okay, in a day you have to work for 7 hours. That means if you want to follow the standard, if you work for 7 hours, the number of units you must produce must be 7 hours times 15 units, which will give us a total of 105 units. That means in a day you must work for 7 hours, and that 7 hours will be, you must produce 105 units. We are also given that the basic rate per hour, basic pay per hour, is 5 naira. Basic pay per hour is 5 naira. So on this particular day, we were told that the employee produced 180 units. So 180 units. Yes, he produced 180 units. So on this particular day, an employee used his own 7 hours to produce 180 units. And according to the organization standard, you should only produce 7 hours. You should only produce 105 units in 7 hours. So this particular employee produced 180 units in the 7 hours. That means the time he was meant to use to produce 105 units, he produced 180 units. That means he actually saved more time. So the first thing we have to calculate here now should be the excess this employee produced. So 180 units, to calculate the excess, should be 180 units minus 105 units. That's the difference between the standard and the actual units produced by the employee. So it produced an excess of 75 units. So firstly, we should calculate the employee's basic pay. You know, his gross pay will be, his gross pay is a combination of the basic pay plus bonus pay. So now the employee's basic pay, from the question, we are to pay based on the hours worked. So the actual hours, okay, he worked for just 7 hours. He worked for 7 hours and he produced, and the rate per hour is 5 naira. That means his basic pay is 35 naira. So before we can calculate his bonus, we must actually determine the hours he used, the number of hours he used to produce this 75 units, because he actually, okay, if he's meant to produce the 75 units the next day, he's meant to use some particular number of hours to produce it, but he already saved that time by producing everything within the 7 hours given to him today. So to arrive at the hours he spent in producing the 75 units, you come back to this formula. Remember we said, remember from the standard is to produce 15 units in an hour. If it's to produce 15 units in 1 hour, then he produced 75 units. How many hours did he produce 75 units? That means in how many hours did he use to produce is he going to use to produce the extra 75 units? So it will be 75 units divided by the 15 units, which is the standard. So here we get 5 hours. That means he saved 5 hours. Wow. So the employee saved 5 hours. And from the question, I told you that premium bonus payable is at basic rate or is at 60% of time saved. So this employee saved 5 hours. So to calculate his basic pay, the 5 hours multiplied by the 5 naira per hour And remember that we are supposed to give him only 60%. Yes, we can only pay him 60% of the bonus of the premium. So multiply it by 60%. So come down here, 35 naira plus 5 hours by 5 naira is 25 naira. And 60% of 25 naira is 15 naira. Which gives us 15 naira. And means the basic pay of this particular employee is 15 naira, and that's option B. So this is all on this question. We move on to the next question now. The payment of workers based on the clock hour worked multiplied by the rate per hour is called dash. I remember when we were talking about the time-based payment or time rates. Time rates or time-based method. We said it is the multiplication of the hours worked by the rate per hour. And from this question, I think that was exactly what they said. It said based on the clock hour worked multiplied by the rate per hour is called A, premium scheme, or B, time rate, C, piece rate, or the bonus scheme. So the answer is time rate, and that is C. So move on to the next one. The information below relates to two employees, employee X and employee Y. The time allowed is 12 hours, the day rate is 18,000. The time taken, okay, let's just put that down. The time allowed is 12 hours. The day rate is 18,000 naira. The time taken by employee X 6 hours. Time taken by Y 9 hours. And the time taken by Y is 9 hours. Calculate the bonus to be awarded to both employees using the Qwuiga bonus scheme. Yes, using the Qwuiga bonus scheme. Okay, the formula for calculating the Qwuiga bonus scheme is the time used divided by the time allowed, which is the standard time, then multiply it by the time saved, and also by the rates per hour. So let's just divide the both. So this will be for employee X and this will be for employee Y. So to calculate the bonus for employee X now. So employee X used 6 hours. We are going to be following this formula. And the time allowed is 12 hours. That means employee X saved 12 minus 6. That's 12 minus 6. Then we'll multiply by the daily rate, which is 18,000 naira, which is 1/2. He saved 6 hours. Then we'll multiply by 18,000 naira. And this gives us 54,000 naira. For X, 54,000. When we move to Y, Y used 9 hours instead of 12 hours. Then he saved 12 minus 9 hours, that's 3 hours. Then multiplied by the daily rate, which is 18,000 naira. So that's 3/4 multiplied by 3, and multiplied by 18,000. So this will give us a total of 40,500 naira. Therefore, employee X will receive 54,000 naira bonus, while employee Y will receive 40,500 naira bonus. So from the options, option A says that employee X receives 54,000, while employee Y receives 40,500. The option B says employee X receives 40,000, while Y receives 54,000. Option C, X 50,000 and Y 40,000 naira and option D, X 40,500 naira and Y 54,000. So the correct option is A. Employee X receives 54,000, while employee Y receives 40,500 naira. Which of these is a method of computing employees' bonus? So remember we said there are 3 types of computing bonus. We have the house scheme, auxiliary bonus scheme, and also have the Rowan's bonus scheme. There are just 3. So we have option A, time-based method, B, house bonus scheme, C, piece rate or output method, and D, incentive scheme. So the correct answer here is B, that's the house scheme, because it is one of the methods for calculating the employee's bonus. Move on to the next question. A detailed record document used to record both the quantity of material received and the price value is dash. We have the bin card, B, store ledger card, C, material card, and D, requisition card. So the correct answer here is the store ledger card. So there is a difference between the store ledger card and the bin card. The store ledger card is used to record the material received and the cost. So the multiplication of the material and the cost, while the bin ledger card only records the quantity of the material received but does not include the cost in its own record. So the correct answer for this option is option B. Okay. The direct material cost to produce plasmocrene was 2,345 naira. The direct labor was 1,250 naira, and the production overhead cost was 575 naira, while the selling overhead was 245 naira. So we were asked to calculate the conversion cost of producing the product. Okay, and from our first video on cost accounting past question series, there was actually a question that was asking us what conversion cost means and what does conversion cost consist of. I mentioned that conversion cost only consists of 2 elements, which is the direct labor cost and the production overhead cost only. So to arrive at the conversion cost, we have to add just the expenses incurred for direct labor and the one for production overhead. So we rule this one out. So the addition of these 2 will give us 1,825. And that is the option A. So the next question. The following are the objectives of cost accounting except A, to communicate the performance of the organization to external parties, B, to ascertain the costs and facilitate pricing, C, to provide information to aid control, D, to provide a formal means of gathering detailed information on operations. Okay, from what cost accounting means, we only use cost accounting within the organization and not for external parties. The B option is actually right. It's one of the objectives of cost accounting because we use cost accounting, the creation of cost accounting to ascertain cost and also to facilitate pricing by determining what our cost should be, the price of the product, what the price should be, the selling price, and how to ascertain our profits. And also it provides information to aid control within the organization and also provide formal means of gathering details for operations. So the odd one here is A. It is only financial accounting that is prepared to communicate with the external parties and not cost accounting. Cost accounting is only used within the organization. So cost accounting is only for internal use. So the option here is A. That is to communicate the performance of the organization to external parties. We move on to the next question. If the hourly rate is 3 naira, the agreed rate of production per hour is 60 units, the actual number of hours taken is 6 hours, and the unit produces 480 units. What is the workers' pay on the Rowan bonus scheme? So this is asking us to calculate just the employees' bonus scheme using the Rowan's method. So the first thing we have to calculate there is to determine the hours saved by this particular employee. We have to produce 60 units in 1 hour. Yes. So that means if you work for 1 hour, you produce 60 units. If you work for 2 hours, you produce 120 units. If you work for 3 hours, you produce 180 units. On and on and on. So the number of hours you work, you multiply it by 60 units. So that will serve as the number of units you have to produce in a particular hour. So this employee worked for 6 hours. Okay, the standard now. We are trying to ascertain the standard. He worked for 6 hours And remember, if you work for 6 hours, it will be the number of hours worked multiplied by the units you are meant to produce in an hour. So you worked for 6 hours. That means the number of units you have to produce will be 6 hours times 60 units. That's 360 units. So this means that this employee is actually meant to produce 360 units. He's meant to produce 360 units within the 6 hours that he worked. But he produced 480 units instead. That means he saved a lot of time. Yes. That means he saved some time. So let's determine the excess produced. So 480 units minus 360 units. That's 120 units. So there is an excess of 120 units. So we are going to determine the number of hours is meant to use to produce this 120 units, because that will serve as the hours is saved from the production time. So to determine the number of hours saved, or the number of hours that is meant to use to produce 120 units, we calculate those as 120 units divided by the units per hour. The units per hour from the question is 60 units. And just 2 hours. That means the time saved by this employee is just 2 hours. Time saved by the employee is just 2 hours. So if this employee saved just 2 hours, how are we to calculate his pay? So to calculate his bonus pay, we are using the Rowan's bonus scheme. And if we are using the Rowan's bonus scheme, the formula for that is the time used over time allowed multiplied by the time saved and also the hourly rate. Okay. We did not calculate the time allowed using the standard. He produced 480 units. He produced 480 units. So if an employee produces 480 units, the hour is meant to use, that means the hours the organization actually allocated to him to produce this particular unit will be 480 units divided by, it will be divided by the number of units per hour. And we are told that the number of units per hour is 60 units. So to ascertain the hours the standard hours is meant to work, it will be 480 over 60. This will give us 8 hours. That means the time allowed is 8 hours. So we'll come back to our formula. The time used 6 hours, while it's meant to use 8 hours, we'll multiply by the difference. 8 minus 6. Time allowed minus time used. That's the time saved. We'll multiply by the hourly rate. The hourly rate is 3 naira. So this will give us 3 over 4 by 2 multiplied by 3. So we equal to. So the bonus for this particular employee is 4.5 naira. So this is his bonus. So remember that the total pay is a combination of the basic pay and the bonus pay. So we've calculated his bonus pay using the Rowan scheme. Now we'll calculate his basic pay. Okay, so we're given the hourly rate. The employee worked for 6 hours. Remember, we've accounted for his overtime work or the time saved here. So we'll just calculate this one based on the standard. So he worked for 6 hours. 6 hours. So multiply by the hourly rate. The hourly rate is 3 naira, and this gives us 18 naira. So to get his total pay, it will be the addition of the basic pay, which is 18 naira, and his bonus pay, which is 4.5 naira. And this gives a total of 22.5 naira. And that's the second option. That's option B. So this is So this is the answer to the question, 22 naira 5 kobo. That's option B. So the next question, given the following cost function, the cost function goes thus: y equal to 10,000 naira plus 20x. So calculate the cost of producing 3,570 units. Total cost for 3,570 units. This is a question under cost estimation. Yes, under cost estimation. Remember when we gave out this formula on our first tutorial video under cost estimation? We mentioned that the y here represents the total cost of production, while here the actual formula is y equals a plus bx. Y is total cost of production, while this is the fixed cost. This is the variable cost of production, while this is the units produced. So now we are told to look for the total cost. Given this cost function, we are told to look for the total cost of producing 3,570 units. So the only thing we just have to do here is to just include this 3,570 in the place where this x is. So we just have y equals 10,000 naira plus 23,570. So now 10,000 plus equals 71. Multiplication of 20 by 3,570 to give us 71,400 naira. Y, which is the total cost of producing 3,570 units, will be the addition of the two, which is 81,400 naira. And that's the third option, that's option C. So whenever we are given the cost function, we look out for what we are asked to calculate, the variables that are given, and the one that we are to use to solve the variable we are looking for. So the next question, the total cost of producing 575 units of a product was 7,100. So 575 units is equal to 7,100. Also, while the cost of producing 250 units, cost of producing 250 units is 4,500 naira. Determine the cost of producing 335 units. So we are looking for the total cost of producing 375 units. This is a typical question from cost estimation also. This is a question from the high and low method. Yes, while the other one was from the linear regression method. So if you have calculated now, the first thing we have to do is the highest activity level is 575 units. Remember, the formula for calculating high and low is for activity, we have for activity, highest activity level minus lowest activity level. Then write the difference. And also for cost. Okay, here the highest activity level is 7,575 units and lowest activity level is 250 units. And the difference between these two is 325 units. 325,575, okay. And we have the cost. I minus low equals the difference also. So the cost associated with this highest activity level of 575 naira is 7,100 naira. While the cost associated with this 250 units is 4,500 naira. And the difference between these two is 2,600 naira. From high and low, the next thing to do is to calculate our variable cost per unit, which is the difference in the cost divided by the difference in the activity level. So now our variable cost will be, the difference in the cost is 2,600, while the difference in the activity level is 325 naira. Therefore, our variable cost per unit. Therefore, our variable cost per unit gives us 8 naira. So when we've gotten this, we'll come back to the cost function of y equals a plus bx, where y is the total cost of production, a is the fixed cost, b is the variable cost per unit, and x is the activity level. So we use this 575 units to determine the total fixed cost. So the total cost for producing this particular unit is 7,100 naira. The fixed cost is A. We don't know what the fixed cost is yet. Then B. The B is the variable cost per unit, which is 8 naira. Multiplied by the activity level, 575, because we are using the cost for 575. So that gives us 7,100 minus A plus 4,600. See 4,600 plus 4,600. So we just make A, which is also the total fixed cost, the subject of the formula, as A equals total fixed cost equals to this plus, okay, this, as this is coming back, it will just be 7,100 minus 4,600. So A is also the same thing as the total fixed cost, which is 7,100 naira. That is total cost of production minus the total variable costs incurred while producing 575, which is 4,600 naira. And the difference between those is they give us 2,500 naira, which will be our total fixed cost incurred while producing any units in this organization. So in order to arrive at the total cost for producing 325 units in this organization, we use the same cost function we used earlier. So this is the cost function where total y equals total cost. The A is the total fixed cost, the B is the variable cost per unit, and the X is the activity level. So we just input our figures. Our total fixed cost from this is 2,500 naira. Our variable cost per unit is 8 naira, and the activity level given in the question, one wants to calculate its total cost is 335 naira. So we bring everything down, and the multiplication of 8 and 335 gives us 2,608 naira. And when we add the two together, this and this, we arrive at 5,108 naira. We arrive at 5,108 naira, which is the total cost of producing 335 units. So the right option for this is option A. That means to produce 335 units, the total cost is 5,108 naira. So to the last question, all are classification according to function except dash have A, the production cost, the apportionment cost, the selling and distribution cost, and the administration cost. So costs can be classified according to function by classifying them as production cost, selling and administration cost, that's also selling and distribution cost, and also the administration cost. The apportionment cost is not a function of cost classification, because apportionment cost is like a cost shared between different cost centers, and it is not a function unlike the rest. So the odd one here is the B, that is the apportionment cost, and that is the answer for this particular question. So this brings us to the end of cost accounting past question series for this particular session. I hope you all understood how questions are being solved and the techniques you also use to solve these particular questions. While solving your questions in the exam, you don't have to start writing out the formulas just as I wrote everything out here. Since we already know our formula, you can just type them out in our calculator, like type in the figures in our calculator and arrive at our answer instead of you writing down the questions, so as to save time. Thank you very much for watching right from the beginning of this past question series till now, and see you in the next session.